Let's listen in.
Better resilience and better strengths compared to so many other emerging economies, and I think India should stabilize much earlier and much faster than the other economies. Last Friday, on the day of the results came out, the markets were very volatile, both currency markets as well as the stocks. Yesterday it was pretty flat, and the rupee in fact strengthened a bit. Today in the morning, so far the stock markets are pretty flat, and the rupee also has, marginally strengthened. But these are early days. One should not rush into any conclusion that things have stabilized. But yes, India will definitely stabilize faster than most of the other emerging economies.
Perhaps there are still occasions where we could see some more volatility going forward, depending upon the news coming out from Europe and UK.
You see, the volatility will continue for some time. I mean, it will be incorrect to say that there will be no volatility. The volatility, you see, volatility and uncertainty have become the new norm in global economy. Now, the Brexit has heightened that volatility further. So, volatility will continue in the international markets, and we have to now see how the British system, how Britain and EU take their negotiations forward, what kind of positions they take. There are challenges so far as India is concerned, but our macroeconomic parameters are obviously our main strengths. There are threats, there are challenges, plus there are opportunities. The various challenges arising out of Brexit, that if EU or Britain go into a further slowdown of growth, then obviously world around, when the global economy, when the global growth shrinks, it has impact on all other economies in the world. But having said that, I would also like to mention that there are opportunities available in the whole process. The oil prices are expected to remain soft. Secondly, I think it gives an opportunity for India and UK to sort of negotiate the free trade and the investment agreements and take it forward. Earlier, it had to be done as a part of the India-EU negotiations. Now, I think it provides an opportunity for India and UK to take forward our FTA, free trade agreement negotiations, and the bilateral investment treaty negotiations forward. That's an opportunity. Then Britain depends a lot on the European Union for its service sector supplies and services which they get. Now there is an opportunity for international players who are active in the services sector, particularly in the IT software sector and other sectors, because Britain will be a market which will be available. But again, I must caution that it also depends on what kind of tariff negotiations Britain and EU they reach. So to sum up, I would like to say that there are challenges, but there are some opportunities. We have to wait and see how it plays out in the coming weeks.
And there are enough tools with us to manage any kind of situation that arises out of more volatility, I would assume.
No, I think we are well prepared. India is well prepared. Our macroeconomic fundamentals, our macroeconomic parameters are all strong, whether it is current account deficit or fiscal deficit or our forex reserves. The kind of pressure on Indian rupee we saw in 2013, compared to that, the macroeconomic parameters and the economy itself is much stronger. So we are much better placed to deal with this situation than we were 3 years ago.
We understand.
Okay, let's move on to